What happened? We ended Q3. We ended it on a high note. Second all-time closing high. They couldn't stop buying on the close. Government shutdown, folks. But you know what the good news is? Buy the dippers came in again. Who cares about what happened at 2:30? We're only down 24 handles. Rally back. Nike showing some major green. That's about it, unless you're in Bitcoin. 835, Joel Kulina, Wedbush Securities, trading, media, technology. We'll cover it all with Joel. Let's get things started on pre-market prop.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning. As I said, we're down, but not out. Down 24 and a half handles, 67.14. The buck just about flat here, 97.39. TLT pulling back down 55 cents, 88.82. USO in the red by 55 cents. Rough couple days for the USO at 73.20. Flight to quality again. Gold busting out, up $2, 357.46. SLV, we got a 43 handle on that. Holy smokes, up 65 cents. Bitcoin up $2,460, 117,650 in the futures. Let's bring on Triple D, who's been observing this price action last hour of the day, overnight. And boy, did they come in with their buying shoes on the close and they're selling shoes overnight.
Yeah, they did. And it was a clean setup in the STN room. We were talking about it going in. And I'm like, if they're ramping this into the close, it's going to be a clean setup to short the close because the government shutdown looming and they're probably going to sell it off after hours. You know, obviously, we've had multiple officials saying the deal was not close. So it was pretty obvious that there wasn't going to be a last minute deal here. And that's why the market started selling off. But they ramped them, Joel. If you just show your charts here, you can show the SPY here, ramping them into the close. If
right
you see
here.
it over here. Yeah, they ramped it straight up. And I was like, wow, that's the cleanest setup. And normally I don't just flat out short the close. Like usually I'm doing a lot of, market neutral trading, balancing longs with shorts. I'm like, no, directional bet, short the close. And it worked like a charm. The stocks came right in. SPY came right in. I shorted NVIDIA on the close. That came right in. It was just a very, very clean setup. So window dressing, propping us up end of the quarter. What is window dressing? Well, you get stocks like NVIDIA ramping up into the close because if you're a money manager, you don't have NVIDIA on your quarterly bucks, you're worried about your job. So it's predictable that a stock like that would ramp up into the close, which it did, made a new all-time high, peeling back this morning along with everything else. So definitely the government shutdown hitting stocks here overnight. To your point, though, Joel, at one point in time, we were down 50 handles, which was probably overdone. We've bounced from those lows, now only down about 24. Kind of feels where the market wants to be, but I do think the buy the dip mentality still looms here large. We've already seen it reemerge here too. So is this the case where, we close the highs on the third quarter and then just tank the entire fourth quarter? I don't think so. I'm staying in the bull camp here. I think the government shutdown here is just going to be a temporary setback for markets.
Well, I mean, the one thing too is if that's your thesis and that's what you're shorting on, and you're just waiting for the world to crumble, what happens when they announce a deal? I mean,
well, that's it. I mean, shorts have got to be short-lived in this market. They work at certain times. They work great at 4 p.m. on the close here because it was a clean setup, but they're short-lived. You get married to these shorts, and it feels like after a few days you're down, and you're like, "What the hell happened? All my short profits are gone." That's where we are. Questions from the chat. Richard asking why crypto. Another trader in there I just saw was asking why crypto again rallying today. I think it's the clean setup too, where when you get the U.S. stock market, and obviously the government shut down, they're flying to other assets. So crypto gets a bid, gold catches a bid, international catching a little bit here as well. So that's all kind of textbook stuff here that we're seeing. Not surprised at the crypto rally. I mean, if the government's going to shut down here, they're going to fly into other assets, and crypto probably a likely place to be.
Before we move on with our regularly scheduled programming, I just want to address this from Gabe Fabe. I thought Triple D was doing buy the close, sell the open this year. There's a lot of different strategies, Gabe Fabe. That's why you got to come in. I mean, a lot of it is based on the imbalances, right, in the markets, what's going on the next day, what a potential catalyst are. So, I mean, the buy the close and sell the open has worked a lot this year, but it's not, you just can't keep with one strategy. The order flow on the close yesterday was so
So
dominated
many
to the bet.
buyers.
Yeah, there were too
It's
many.
typically a fade. Like end of the quarter is typically the fade trade. Remember biotech like 7 years ago or something, and they just bought it all up, and that was like the highs forever for years. So end of the quarters are just typically fades. So I would say, it's the weekend trade that I very much have been buying stocks. So the Friday night to Monday trade, we've seen that a lot. That's worked very well, and I've been doing that quite regularly, buying a lot of retail darlings on Friday night and flipping them out Monday morning. But I mean, the strategies are dynamic. Trading is dynamic. And I'm not always just going like just textbook, oh, yeah, we're just going to buy the close, sell the open every single day. I mean, when you have such a clean setup, you have like the Ducks were all in a row last night to short that close. You got the government shutdown probably coming. You got a window dressing ramp at the end, which typically is faded anyways. I mean, all the Ducks were in a row to be shorting that close and selling out. If you had some trades on, selling out on that close. And if you're in the STN room, you'd be, knowing that's what we're talking about there. So it's all about the markets are dynamic. Trading strategies are always adjusting. So, what I'm doing today may not necessarily be what I'm doing tomorrow. I'm very much a creature of habit, looking at fading imbalances, doing certain things, relationship-based trading, sympathy trading, looking at ETF arbitrage, all that stuff applies. But the directional bets, are all different all the time. I mean, it's very much worked to just buy the dip for them since April. It's been working to buy the dip on most stocks. So, that's been a primary strategy of mine. But, you're adjusting every day and you're taking the information you have for that day to make, calls and to make plays and to try to make some money.
Okay. All right. Good recap of yesterday, and man, some action after hours yesterday, huh?
Yeah, like again, we just kind of covered that with the S&Ps rallying up at the end there. There was a few other ones. Brentster can come in here too. Brentster, you kicking around the background here? We bring you in to cover some of the news from last night because we did get the Nike report. Brentster coming in here. What's he got? What do you got?
My mug says dragon ass. And it's
a dog. Is that what you're doing? Is that what you're doing this morning?
A dog wiping his butt on the floor. Maybe. Maybe I'm dragging ass this morning.
Yeah, I kind of feel like I am too. I mean, I don't know. It's
slacker.
Just this September, like I'm a little bit nasally. I've had this little touch of whatever the hell it was, flu/COVID. It's all the same stuff. Now my kid's sick again. I mean, it's just kind of September. The weather's the nights are cold. The weather's starting to cool off here. So, it is kind of a dragging ass month, but we're getting into October now. So fall, pretty colors. We got to start picking it up here. Are we going to get an October crash? Sometimes we get those. I don't think so. Some people are calling for it. I don't think so. But Brentster, last night we did get some news. What's that?
I said, what can I help you with?
We're looking at Nike because we want some good news here. We see a lot of stocks down. Majority of stocks, when I'm looking at my 200 here, are red. But one stock sticks out like a sore thumb, and that is Nike. Nike, just do it. They kind of did it last night.
Solid report. They reported 49 cents versus about a 30-cent estimate. Their sales were nearing 12 billion, 11.7 billion. Analysts were down at 11 billion. I did not love the guidance. I felt like the company's CFO in the press release was giving a couple warnings, talking about progress will not be linear in their momentum heading into the second half. But investors, maybe a low bar, I don't know, but investors are liking the report, and I guess they're not too concerned with the guidance today.
Nike popping. It was all over the place on this report. So it lifted. The algos can't help themselves. They see a beat. They just buy it straight to 74. Then like 10 seconds later, it's back under 70. Then she runs up. Then she comes back down. And then she finally decides after the third oscillation that she wants to be higher there. So it was kind of all over the place. I mean, the algo moves are always incredible there, and they're usually wrong. But this now it's trying to get back up to where it was 10 milliseconds after the report, which it's still not there.
Yeah, I see that. The quick pop over $74. Let me get the exact price to you. The setup here is, I think, pretty straightforward. Sold off into the report, right? And pretty good sell off, kind of going contrary to the market. So now you got all these people scratching their heads saying, wow, man, this thing hit 80.17, under 70 ahead of the report. There's definitely some overhead supply in here. Pre-market high, does it coincide with anything? No, not really. Pre-market high comes in at 73.10. 50-day is way up here at 74.73, and then you also have the retracement up. There's just a lot of overhead here. I keep an eye on that pre-market high, and in fact, if it gets up to the 50-day, that held as resistance earlier in September. So I think longer term, until you can clear that pressure, still on Nike.
I have a little break.
Go ahead.
I have a little breaking news. We have a press release from Amazon introducing Amazon Grocery. Kroger is moving lower on this. Walmart does also look like it's moving lower. We could come up with a couple other stocks here for grocery if you want. You could do like let's check on like a SFM, Sprouts Farmers Market. That one's really not moving, but I don't know that it would. But I don't know about the follow through on this one. I would just say.
When did this break?
It broke at 8:10 a.m.
It just broke.
It just
grocery.
Broke. Yep.
Amazon not moving on it. I don't think Amazon really cares itself. I mean, they're doing stuff. So introducing Amazon Grocery, a new private label food brand from Amazon offering quality products at everyday low prices.
Where did Spartan Nash go? SPTN. Did that get taken over by somebody? That's your like generic food company, Spartan Brands. It sounds like that's what this is. A new private label brand featuring more than 1,000 high quality food items rated 4 stars or above. Okay.
Yeah, just trying to read this on the fly here. So extensive selection includes everything from milk and olive oil to fresh produce, meat and seafood, with most products priced under $5, offering exceptional value to customers. So basically, this is like their own Amazon brand of food. So I don't know if it's like necessarily like competing, like obviously, they compete with Kroger already, but kind of competing with like, other branded foods. So maybe you got to think about like
Spartan Brands. That's why I said that. Yeah, like your generic food makers. Drive with a good point here. Like, doesn't Amazon already do groceries? Yes, this is. I think the algo reaction was on the grocers, but this is more of like its own food brand thing, not necessarily grocery, although that's what they're calling it.
Yeah, I don't know what to think about this. So torn. I don't think it's going to be much of a mover. Like you think, is it going to hit a General Mills and some of those that make Campbell's? Like they're making their own thing. I don't know. I don't see much movement here yet off of it, but I think we keep an eye on all the food stocks here. So, because Amazon, that's what they do. Every couple months, they come and piss in somebody else's pool. This is what they do. Slow and steady, just getting into everything. I mean, that's what's smart. It's smart of them to do that.
This Amazon chart doesn't look great. Look at that.
There's a lot of charts that don't look that great, to be honest.
You know what? I agree. Look at that. That's trading well. I mean, $9 below its 50-day. Nvidia is a whole different story. That made a new all-time high yesterday. Microsoft just clinging to its 50-day, right? That peaked off that earnings report. Wow, what a blow off top that was. Apple, has been perking up, but that had been the laggard. Amazon below the 50-day. Google, kind of mixed here. Meta had a bad day yesterday. That's losing its 50-day moving average. So even some separation here in the big tech.
A lot of other headlines here too. Everybody's asking about Reddit this morning, which is down 9.5%. There is a headline kicking around that OpenAI, and I saw it too. ChatGPT is not using Reddit much anymore for their answers. So, Reddit was seen as this database of information, where we're going to be relying on all of the, what everybody else is saying over there. And they're saying maybe not. ChatGPT not using it as much. These are just rumors kicking around here, but I think it started as rumors and it's just starting to kick up even more here now. So Reddit trading down 21 points. We do have to keep in mind that Reddit has been on a hell of a run. I mean, stock go from 100 to almost $300 in 3 months. That's a ring the register moment, folks. Now you got a head and shoulders up there, and the chart looks tired. Now you get a resolution to the downside here. 200 critical support for this to hold.
I see a cluster of lows ahead of. Oh no. Yeah, the 2.8 to 2.10 area. We're trading 22.40, down 22.44. Step down seller right here. Someone absolute wants out here. I don't know. What's my next daily low? Next daily low comes in at 205.37. And then after that, the psychological $200 level. Actually, there's been back in August, you had 3-4 lows at like 205, 209, 206. So that's kind of sticking out here. Big windfall here for anybody that's coming in, on the short side, unexpected news, trading in the red quite a bit. But let's see. And then for recovery, man, you're just slicing right through the 50-day here. So need to get, that's going to act as resistance now. That's closer to the 220 area. And that's it. That's it for our DTT. I don't
ADP.
ADP is down 32,000 jobs for the month of September. Economists were looking for a 52,000 job gain. It looks like a big miss and a decline here for ADP non-farm employment. This is from a non-government organization, something to remember.
Bring up the TLT here, Joel.
Yep.
Let's take a look at this and just see what the move here is. It oscillated down originally. Now it's popping up. I mean, this is more food for the Fed to cut rates.
Yes.
We may not get Friday's jobs number. It looks like we won't with the government shutdown here. So this might be one of the only data points that we're, one of the main data points that the Fed's going to be able to use, because we're not going to get the main jobs number on Friday with the government shutdown here. So a little bit, this is what the dual mandate has been talking about here, like jobs important, but also inflation, keeping that in check. While jobs falling here now, so that gives a little bit more cred that the Fed might lower 3 times this year. So I would think you start ticking up on that possibility. I do believe that's why the TLT is ticking up here as well. Interesting reaction from the markets here, because before when we were getting the light numbers, they would rally on that because, we're going to get that Fed cut here. But I do think that a lot of that is already priced in here. So now it's like, well, we're getting the cut, but jobs aren't good either. So let's just sell them off anyways. I think it's not like bad news is good news anymore here, because we're expecting those cuts to come anyways.
Bad news could be bad news, right?
Yeah, we might be getting back to that. We may actually getting back to that market. And we haven't been there in a year. It's been all about like, we need those Fed cuts. We need light economic data because we need the interest rates lower. Now we're getting bad news, and we're getting the interest rates lower already, and they don't want bad news anymore. So it's kind of changed.
Yeah, the psychology. Of course, we'll see what happens with the government shutdown, what happens on Friday. I mean, I'm pretty much in the camp. We're going to get another rate cut this year. I just don't think you can put a timestamp on the third rate cut. And I think when, you go back to what Paul said, and Dennis, you said this initially, you thought it was like a hawkish cut. Like they did, rates are going down and everything, but I don't know. We'll have to take a look at the Fed funds tool through 26. I think that's what on people's mind. Are we just going to keep cutting in 26? Or, we're going to get 1, 2, maybe 3. So I think
it was a bit of a hawkish cut. And then we had Gouldsby, a little bit, concerned as well. So, maybe this number here gets them saying, okay, we got to do it again. Let's cut another quarter. So I know our own Blue Putnam on here has said it's not like the Fed style to go one and done. So he's expecting a couple more as well. Blue knows a hell of a lot more about, how the Fed works than I do. So I'm going to go with Blue and say we're probably getting a couple more here and one, coming very soon. So, okay, that we covered Reddit. We covered a few stocks here. ASTS. This was one from last night. And I was very surprised at the extent of this move. So it was actually a tweet from the company that moved the stock last night. People were like, what's going on ASTS? What's going on ASTS? Well, from the tweet from last night from the company itself, and I'm trying to find that. If Brentster, if you do have that, you can grab it too. But they're talking about a whole schedule of all these launches here. So, which, on Bluebird 6, and I don't follow the story that closely here, but that tweet came out and the stock started lifting right away. And at one point in time was up more than 10%. So it's come off those highs a little bit here, but ASTS getting a pop. You can tell just how much the algos like these storied stocks here. They get some scheduling of launches. Actually, at one point in time, I think it hit up to 56, 57. That was up about 15%. Has peeled off those highs, but ASTS, give us some technicals here, Joel.
Ooh.
You're gonna
Sorry,
have to with some.
I was just going to show the tweet, but go for the
show it.
Joe.
Sure.
Show the tweet.
Okay, cool.
Robin.
Okay, one sec. Okay.
He's grabbing it.
Clicking. I got to click here.
Now we got to start following these companies' Twitter profiles too.
Can you guys see it?
Yeah, we'll add to the screen right now.
Okay, thanks.
Here it is. This was the tweet from last night. So Bluebird 6 has completed final assembly testing, ready for flight. On October 12th, it will head to India aboard an Antonov large cargo plane. We're officially kicking off our next generation launch campaign. Bluebird 7 expected to ship, then Bluebirds 8 to 16 in various stages of production, on track to complete 40 phased arrays by early 2026, bringing up Bluebird to 46. So anyways, lots of launches here coming up. That's got everybody excited, at least in the retail community.
Okay, your chart's back on stage, Joe.
Yeah, okay. 55 is like kryptonite here in this stock. He made the all-time high at 60 in July, and then you've had 1, 2, 3, 4, 5, 6, 7 attempts to clear 55, and I'm not going to give you all those individual highs here, but just look at that. Just right here, right across this line, every time you're 60 sellers, someone really wanted out at 60, but they're like, you know what? 55 is just as good. So we'll see what happens. Pre-market high took that out. Very important on a day like this, down market, stock up. You want to see it go up and take out that pre-market high, right? Just at least test this 55. Now that you've faded a little bit off it, you have some people that chased it in a little bit of trouble. If you're looking for support, that's way down at the top of yesterday's range at 49.72. Maybe drill down on your lower price chart. But right now, resistance a lot easier to pick out in ASTS, and that's major resistance over 55. I may, and this is a big may, have someone that can get me an executive on from that company. I'm working on it.
Joel.
I would put it, I'd put it at like the 25% probability, 25 to 30. But someone in the C-suite, that would be nice to get here on pre-market prep.
Okay, so then we have LAC as the other story of the day. Retail darling stock has turned from piss to bliss, been really moving up here. $3 up to over $7, back to $5, peeling back, and now back up to new highs here once again as we get confirmation of the deal we already knew about. So, we knew the government was potentially taking a 10% stake in LAC. That was confirmed last night by, who was it confirming this? Brentster's in the background.
Was it the Journal? Was it?
No. It was an exec. It was a not exec. It was somebody from the government. I forget who.
DOD, Department of Energy. I think it was somebody from the
Department of Energy. Yeah. Yep. So again, and we did get the official press release here this morning as well. Lithium Americas has reached an agreement with General Motors and the U.S. Department of Energy regarding a first draw on DOE loan. I believe is talking about a 5% equity stake in the company, but then also a 5% stake in JV warrants. And some of these warrants have to do with this U.S. operation here. So this joint venture. Also General Motors involved here as well. So algos get all antsy in their pantsy. 19 million shares already traded here this morning. Stock is lifted up. Major resistance up here at 8. The one thing I will say is cautious to the chaser here because we kind of already knew this news. We knew the government was going to take a stake. We got details of it now, and they love the details. And again, it was just rumors before, so they like the confirmation of it too. But, I'd be cautious just chasing this up. I think you could get it at a better price.
I think you're looking at the double top at 750. You're trading above it. You're trading above it as we speak right now. Pre-market high over $8. So someone had some offers out at 8.18. You just revisited 8.15. That could have been on some of the Robinhood prints. But keep bid at this 750. Hey, let's go. Let's take out 8.59. You lose that 750. I mean, a lot of people got caught between 750 and 550. Let's see if they'll ring the register here. But boy, big gap up. Let's see if we can hold 750. And what are the monthlies saying here? 2 monthly. Oh, this is stopping near monthly resistance too. Going back to 2024. 765, 771. So important, very important area here for LAC. Let's see how it holds on today.
They're asking about Oxy. We had a good trade on this one last night too. I bought the close on Oxy. So you see, we do news trades too. So even when I'm short and bearish, I bought the close on Oxy because
you can do that, man. I don't know how you do it, but you do it. It's like
well, this was a no-brainer too. There was some really simple trades last night on the STN room because we had a 351 Wall Street Journal headline breaking that Warren Buffett is nearing a deal, a $10 billion deal to buy Occidental Petroleum's petrochemical unit. When you get those news items happening right before the close, it's a good possibility it's going to be continued strength after the close, especially when they peel back. Stock went from 46.5 up to 49.5 because the algos are all stupid. They just see $10 billion deal and they buy, and they're like, no, it's not the whole company. It was just buying just a piece of it. Then it peels all the way back, closed at 47.25, which wasn't even far from the low of the day. We're talking a stock that rallied $3 and then closed 75 cents off the low. So it was kind of a no-brainer there. It lifted nice last night. So it lifted up right after the close, and we were able to get out for a nice little gain. It's peeling back here this morning. I mean, it's still no confirmation here, but the rumor is that Buffett is going to pay $10 billion for OxyChem, which is their petrochemical unit. We still don't have confirmation of this stuff.
Well, wonder what Warren's average price is in this thing. I mean, I know he's been.
Well, that's what I'm wondering. Is he just like so ticked off that he's so underwater? And believe me, he is down some big bucks in this because he was buying this in the 60s, like loading at 60, 60, 60. And it's down here at 47. So maybe this is like a rescue mission for one of his stocks on his way out because obviously he's retiring at the end of the year. I don't know what to say, but Oxy has been, not the best place to be here. I don't know if chasing this is the idea. I think you get, a pop if it does get officially announced. I think $50 is major resistance, though.
You talking about the 60s because you're talking about the price action here. Got COVID.
Well, we know when he was buying because I can remember them all. So I'm talking about not a price action. I'm talking about reading the SEC filings and all those purchases he had at 62, 61, 62. And we talked about the 60 floor for so long in Buffett. And we stopped buying, and I sold my stock when he stopped buying. I was like, if he stopped buying, I don't want to own it anymore, and that's when it collapsed. So do
you remember the SEC filings from 2018 when he was buying, when he helped out?
Was it back to 2018? Was it that long ago?
Yeah, because didn't he?
Was it 2018? Was it 2018?
Yes, but he.
I don't think so.
Okay, steak dinner.
2022. I don't remember him maybe he had a position in it.
No, he helped finance that deal.
2023.
Okay.
We got a steak dinner bet here,
8 years ago.
We got Buffett.
I'll research.
I know. Wait, I'm not going to take Dennis's money on this because I
You're telling me he wasn't buying in 2022, 2023, 2024? Yes, he was. You're absolutely wrong. He may have been buying in 2018 as well. But he was definitely buying in 2022, 2023, 2024. How do I know that? I made a lot of money off Oxy.
I know. I'm just talking. The conversation began when we were talking about his average price. Okay.
It's around 60.
The foundation deal happened in 2019 when Berkshire Hathaway provided $10 billion in financing for Occidental to take over Anadarko. That's what I was trying to think. Remember, it was a battle between Chevron and Oxy for Anadarko. He came in, he put all the money, he gave him $10 billion in financing. I think he also got some preferred stock. So I'm telling you, he is maybe 18. I was a little wrong, but 19. I'm telling you, he was dealing with the stock, dealing with the company, dealing with finances in 2019.
And then he really started lowering on the sell. I don't care about any of that, but I do care that the 60 floor was there, because we can remember from the SEC filings, and Brentster, you follow these all the time too. There was purchases. It seemed like every time it got down to 60, Buffett would take a big stake. And we know he's built that stake up to like 26% of the company. People were speculating that he was going to take the company private, and then he squashed all that speculation and saying, don't know what we would do with it, meaning I don't know how to run it, so I'm not going to. But now apparently he feels like he can run the chemical business here. So that's the news. Don't expect this stock to rip up to 55, 60 on this. I think if we actually do get a deal, I think it's 50. And I think I'd probably be a seller there. So this isn't going to be like a, oh my gosh, Oxy's taking this and this is going to $60. That ship has sailed.
You did get a big spike, and you think about this stock, how much volume it trades and everything. It spiked up to $48.99. This came out during the day session, when the news came out, with the $49.45. Let's see it stay green. If this is a great thing, then let's just stay green. It was also, it was about 80 cents off the low of the day. So keep an eye on unchanged here. Tried a couple pops towards 48, but even getting rejected at 48 here for OXY. Just been quiet down here. Bottom in April, like the rest of the market, but unable to clear $50 longer term.
All right, 8:32. Guest coming on here in just a couple of minutes. Actually, I think our guest is here. If Joel is ready here, he is. He's thumbs up. He's ready to rock. He wants to get in this Warren Buffett conversation. Let's go grab Joel Kulina.
There he is, Joel Kulina, technology, media, trading at Wedbush Securities. One of the best first names on Wall Street. Joel,
of course he says that.
How you guys doing?
Good.
Surviving. I can tell you and all your listeners, September was probably one of the most challenging months for a lot of my clients, and it seems like in the world of tech, it's been a game of whack-a-mole, day in, day out, and it just doesn't end, right? You got Reddit, as you guys flagged, getting below 200, getting blown up this morning. It just never ends in tech. It's definitely been fast and furious, and now we've obviously seen an uptick in open AI products and in initiatives, and that's it's creating a lot of shoot first and ask type of behavior out there in tech.
It's a weird market, Joel, because you have some stocks like Nvidia may do all-time highs yesterday. You have some stocks that are very strong, but then you're getting separation here now, where you have some tech stocks, even within tech itself, starting to roll over and not looking that great. Joel was looking at the Amazon chart here this morning. It's like, that's showing some weakness here. So, it's kind of back to a stock picker's market where you got some stocks performing and definitely some stocks underperforming here. How do you navigate a market like this?
Yeah, it's not easy, right? And I can tell you, again, the long short community, it's been very challenging to generate consistent P&L, especially in September. Yeah. We've had stocks go straight up, whether it's memory, storage. Alphabet's been a great trade since the kind of DOJ favorable ruling to start the month. Apple's, again, risen from the dead a little bit, is a huge outperformer in Q3. And touching on the mega caps, I think it's obviously relevant for tech and all your listeners, I would imagine. I was getting questions from some pretty smart funds yesterday. Why is Microsoft, Meta, and Amazon, why are they lagging so much? And looking at Q3, Google was up 37%, Apple up 23%, Qs were up 9%, and Microsoft, meanwhile, was up 4%. Meta was up 1.5%. Amazon was down about 1%. So yeah, it's a pure stock pickers market, and you're still seeing a propensity to lean into stories that are just a little bit cleaner. And I think that's where Alphabet kind of stands out. Right after Labor Day, you had the favorable DOJ ruling, mother of all clearing events. And again, the AI narrative with Alphabet just continues to strengthen, and that's been the case since May on their developers conference, which just went over really well. And then you have Apple. Obviously, global long only has been underweight this thing for years. Hedge funds, it's the number one funding short. But you know what? I'm actually finding bulls for the first time in a long time. AI is a call option now. It's not priced into the stock. Nobody owns it. iPhone 17 checks are good. And we continue, and now we can kind of look out. Listen, a year now, we're going to get the foldable phone, which is probably going to be the first really sexy upgrade in form factor we've had in quite some time. On the flip side, Amazon, people are sitting on their hands, waiting for the evidence of AWS to accelerate. Microsoft, again, the pushback here is that the last 2 quarters are as good as it's going to get. And then Meta, again, it was the I think it's more of a function of money going into Alphabet more than anything. But now there's increasing kind of concerns around the consumer and ad dollars, so that's been weighing on Meta a little bit.
Joel, you're talking about, separation in stocks, even within the same sector, but there's some global separation going on here. I
Yep.
mean, money is moving around all over the place. Certainly, the dollar, the weak dollar has a factor in that. China's been red hot here.
Yep.
Great ending to Q3. Q4 kind of starting out in the red here. What's the global outlook?
Yeah, I mean, there's clearly, I mean, that China, right? Another group of stocks. I think when you're looking to invest in these stocks, BABA is still one of my favorite stocks. It's not overly expensive, and again with this whole the chip war and the kind of chip restrictions and there's some big tech advancements over in China, and the thing is with China, for years, really since Alibaba had their IPO derailed in late 2020, government and President Xi were a big headwind to the tech industry. Well, that's all changed. I mean, you could have bought Alibaba the day Jack Ma was seen pictured with President Xi, and it would have been a home run. And I think that just really, it's obviously a culture of symbolism, and you still have the government realizing the importance of AI, how this arms race plays out. Clearly, they're behind in terms of chip manufacturing, chip performance, especially in terms of Huawei versus NVIDIA. But they are closing that gap quick. There's a lot less regulatory tape over there than in the U.S., and I think that's been a big bull thesis for names like Baidu and Alibaba. But again, you highlighted it at the top of the call too. Look at NVIDIA. All this noise under the hood in tech, and meanwhile, NVIDIA breaks out of a multi-month consolidation yesterday, and you have positive supply chain data points out of Asia which seem to be nonstop this week. And again, I mentioned OpenAI. There's just been an unrelenting pace of AI product rollouts of late. You had Anthropic had the Sonnet 4.5. OpenAI has the Sora 2, and it's just impressive. And I think, I mentioned the Sora 2 real quick, and we know Google's done some great stuff in terms of some of their video products as well. It bodes very well for memory, and it bodes very well for the storage, which all these products are going to demand a lot more memory for the compute and a lot more storage. So HDDs, Seagate, Western Digital, I mean, these are stocks that have gone straight up, but I think they're going to be buy the dip type of stories. You never want to sell memory because they've gone too far. Typically, they're hugely momentum driven, and again, I'd be buying the dips of the memory until something tells you the story's kind of stalled out or shifted.
I mean, is there a case where we should just stay with tech overall, like overweight tech and like ignore? Because, the last month, we started to see the value trade come back. It's probably because interest rates are actually starting to go lower, and a lot of these stocks are more interest rate sensitive here. So, we've seen the small caps after a 3-year, 4-year downturn here sneak up and kiss an all-time high the other day. We've seen the XBI come back here, back above 100 again. So we are seeing some other stocks starting to pick up the slack here where we've seen tech lag a little bit. Is this just a temporary blip, though? Are they going to fly back into tech because AI is coming and it's for real and it's going to change everything? Or, where do you stay overweight tech is my question.
I don't think you need to be as overweight as you were probably coming into this year for the very reason you just highlighted, or we just kind of discussed. Like, look what's going on, the chart in Meta, chart in Amazon, Microsoft. I mean, 2 of the most crowded longs in tech within the internet, space over the past 2-3 years, Netflix and Spotify, those stocks are flat since May, right? So price action's telling you something. You don't need to be overweight, but again, if you find a story that's sexy, just don't just lean into it. And again, winners continue to win, and there has been a kind of either AI winner versus AI losers, and so I don't think you jump off a stock because it's going up, but it's been what I'm not seeing, and what I'd advise against is buying stories that still have an elevated amount of hair on them. You're trying to catch a chainsaw. That's just not working. Look at names like Adobe. Salesforce acts like absolute death. That's now a perceived AI losers, and software. software's always been in the crosshairs of this AI roadkill narrative, right? And that's sort of what I mean. Look at yesterday, software versus semis was down 3%. Just brutal price action software. OpenAI is going after DocuSign. That was down 10% yesterday. Another product's going after sort of HubSpot. That was down 10, 11%. So I think I'd avoid software with any conviction. Stick to the semis, and for AI too. I still have to think the names exposed to on the energy power side of it is where you want to lean in on, and it's pretty clear Trump and his administration, energy is one of their top priorities. Number two is probably domestic chip manufacturing. Why I probably like Intel here, as dirty as that feels. But I think look what the administration is pushing to. You're going to have tailwinds for the next few years in terms of energy, power, and domestic manufacturing.
I want to take it back just for a second. You mentioned Salesforce, and I watched an interview on Mad Money with Benioff there about 2 weeks ago. And he was clearly frustrated with his stock performance here. He was mad that the stock was down on the earnings. Kramer was challenging him a bit. He was getting mad, said this was their best quarter ever. And then he went on this rant comparing himself to Palantir and saying, hey, Palantir is trading 150 times sales. He's like, if we had that kind of multiple, we'd be $1,000 stock. He's like, basically, and then trying to say, we're a better company than Palantir, and the market's just getting it all wrong. Is the market getting it wrong, though? Like, because you said you're nervous about software, too. They call themselves the ultimate AI company. I see their commercials there. Salesforce talking about AI. They've got Matthew McConaughey out there pumping AI and telling them they're an AI. It's almost like they're marketing their stock and saying, hey, we're an AI company, too. But you kind of hinted that maybe that's not the case.
Yeah, I mean, I can't remember last time you ever see Jensen, in NVIDIA doing commercials saying how good they are. It
that's
just
what
doesn't happen, right?
That's what Salesforce is doing.
And Salesforce had good results, but again, when you look under the hood, my number one takeaway probably I think Salesforce reported right after Labor Day, September 3rd or 4th, and really the questions that came up in my conversations were just people questioning the durability of demand, especially with Agentforce. It's becoming very crowded. And again, now here we are. It looks like OpenAI is on an absolute mission to steamroll many existing companies. Altman's hosting the OpenAI Dev Day on October 6th, which is on Monday. And software seems right in the crosshairs. A lot of these initiatives as OpenAI looks to monetize this. What they're doing or what they've been doing.
How do we get that list of companies that you think could get steamrolled here, Joel? Are you guys publishing a list on companies? Because this is very interesting to me because a tech stock is not a tech stock anymore. To your point, some of these software names, Adobe. I mean, if OpenAI is for real and it's coming, there's going to be some losers here. How do we get this list of losers here? So stocks, one, we don't invest in, two, maybe we want to short them.
I mean, the thing is with tech, that list continues to evolve, right? There's not a set list, but what I can say, I mean, here's another bank shot. You mentioned Meta before. I think Alphabet's still one of my favorite mega cap stocks. I think that has a lot better chance Alphabet's going to go up 50% from here than Meta's going to go up 50%. So in terms of pure alpha, I think Alphabet's where you want to lean to. But look at Meta. I think OpenAI is they potentially could start attracting digital advertising dollars as well. So that's also impacting Reddit too. Reddit was a big laggard yesterday, and that's sort of the fear there as well. So like all these initiatives at OpenAI, I'd be a little bit more concerned about the Metas of the world, the Pinterest, Snapchat, Reddit. I think stock's going to be in the penalty box for a little bit, unless at least today's headlines are debunked a little bit. But it is tough. So there's software. They all have these little niche products. They can, it's very tough to kind of put out a list. Other than like Adobe's obviously an AI roadkill. Salesforce is pretty close in that bucket. But again, I just would avoid software almost altogether. I just think there's better stories out there in tech, whether it's within internet, within semis, hardware, energy, power. But software investing the past 2.5, 3 years, really since the launch of ChatGPT, is probably the trickiest it's been forever. And you are seeing software, professional software portfolio managers get blown up week in, week out. And it's just a never-ending minefield.
What about Oracle? Where do they fit into all this? Because they have been moving with NVIDIA. They've obviously got a lot of deals. They had some crazy revenue guidance
Crazy.
looking out to 2030, and then everybody got really excited. The stock had its biggest move like ever, up 100 points. It's given back about half that gain, a little bit more than that now. What are your thoughts on Oracle? Can these numbers, can they hit these numbers they were projecting out, which would be crazy? But, do you think this story is for real?
Well, I mean, I can tell you T+1, I was drinking the Kool-Aid. I mean, stock was up, I think 20%. I think it peaked at 40. It peaked up 40%, but I think 1 or 2 days later it came out right around 2 p.m. in the afternoon. I remember the stock was trading around 327. And that's when the details of their OpenAI relationship started hitting the tape. A $300 billion deal with OpenAI. So you're talking a $300 billion deal with a company that lost $5 billion in 2025 on about $14 billion of revenue. Where the hell are they going to get this money from, right? Just the never-ending capital raise kind of argument, and hence why the AI trade's gotten a little bit squishy at times as well. People are trying to figure out like what is going on here with OpenAI, what's realistic, what's pie in the sky type of assumptions. But now I think Oracle, the number one, what tech investors typically don't like is when you do get customer concentration, and now Oracle has a customer concentration problem. No one realized that day it was up 40%, that OpenAI was all of the upside. And so then again, the stock was 325, and right now it's trading with a 279 handle. And it's, as you said, it's new lows for the move since it gapped higher, and it's only up like 12, 13% now since its print, which seems a little bit more probably fair. I would be buying Oracle though. I mean, again, you got Larry Ellison, open door to the Oval Office whenever he wants. Again, if you're a believer in AI, I think Oracle's still the name you want to own, especially within the large cap software universe.
All right, sorry about that. I just kind of went poof.
What happened to you?
I don't know.
The computer blew up.
You know what?
Joel's getting too much information. The computer couldn't handle all that information.
Yeah, remember during COVID when I thought that people were spying on my internet, right? Remember that? I thought that no.
Oh, yeah,
just joking here. Did we cover? What did we miss here, Joel? I just kind of I wanted to ask you about, there was a deal kicking around with was it Skydance? Was it it was proposed? I'm trying to think. It was like it's a crazy symbol, PSKY or something like that.
With Warner Brothers, the big kind of and that's actually so Warner Brothers and Paramount Sky, again, Larry Ellison's involved in his son. His son is obviously his company is making a pitch to buy Warner Brothers, which again is a negative bank shot for Netflix, right? And in the sense where the streaming wars were lost a long time ago, and it was very short. But now I think Netflix has 300 million plus subs. You put these two companies together, their content library doubles. They have over 200 million subscribers as well. Becomes a formidable number two. So that's been interesting in changing the streaming landscape a little bit. But I guess going to Netflix, the numbers are 3 weeks out. As I highlighted earlier, stock is flat since May. I think this stock's actually setting up for a great trade on the long side into the print. There's clearly an investor debates around the cadence of how much more pricing leverages are in the model. Perceptions around Netflix competitive moat. And again, what is the rising focus of live entertainment? Kind of where does that fit in with their content investments? But again, there's a little bit of a wedge formation here in Netflix, and again, with numbers on October 21st, I think this is setting up to be a great buy into the print because positioning is cleaning up significantly, at least on the institutional side of things.
What about tariffs here? Because I want to talk, because we actually had Netflix on our tariff-proof list, which we had 2 months ago.
Right.
And now all of a sudden, Netflix is going to get tariffed too. I mean, the Trumpster, he figures out how to tariff everything. He's going to tariff movies here too. And Netflix gets dinged on this. I mean, are there any tariff-proof stocks? Two is, well, you're talking Netflix already, but let's just talk tariffs in general here. I mean, the tariff trade's kind of come and gone where, the market doesn't seem too scared of tariffs anymore. Maybe it's because we're landing at this 10% spot for most countries, or 15%. They're a little bit happier about that. But give us your thoughts here, on tariffs going forward.
Yeah, I mean, it's obviously, I've honestly given it a lot less, attention over the past, month or so. It's become just so exhausting. But yeah, I think as I mentioned, Netflix and Spotify flat since May. A big part of that has been, the tariff premium in those two stocks has reduced, right? They're always the perceived winners in type of all environment. Regarding tariffs in the movies, the movie sector, I think that's just hot air. I read a little bit on it. It's like, how do you determine where a movie's made, right?
Yeah,
Like,
hard.
shooting locations are all over the globe, and you could have a production team or editing team, and I'm not that familiar with how a movie is made, but there's people all over the map, right? Especially with post-COVID, with the ability to kind of work remotely. I mean, I think it's just one of these things that was probably said, outside of a helicopter and with not much thought given into it, how they can actually do it. So I wouldn't worry about that for Netflix. But again, stock where it's become a lot more controversial, a lot more elevated debate into the upcoming print than I feel like in previous quarters. Other names are definitely, again, what I said earlier. Any of your listeners, look at the charts here in like Instacart. We Scott Devitt here at Wedbush downgraded this thing on August 8th on intensifying competitive pressures. And since then, you've had Amazon has kind of have ramped up their same day delivery for perishable items. Earlier this week or maybe last week, DoorDash announced an expanded partnership with Kroger's as well, which accounts for a big part of Cart's business as well. I think 10 to 15% of their GTV. So the gross trade value. So it's again, I would avoid stocks that have gotten hammered for fundamental reasons. I think this is right now. This is the kind of classic buyers are higher, because if you can buy a name like Cart, Trade Desk is another name that they've been under assault from Amazon on the ad tech side of things.
For sure.
Yeah, you buy these stocks, I think, when they're 7 to 10% higher for the right reasons. And if you're quick, you can get in, but I wouldn't be just buying them because they're lower. I think that's just sort of a sucker's game. Lyft, I've been seeing buyers, a name that was really out of favor with investors for a long time. Third-party data there continues to show growth is tracking above expectations. So Lyft has been an interesting name where we've seen sentiment shift a lot more positively of late. Whereas Uber, again, the stock just seems like a magnet to $100. Very controversial. Generalist long only community loves it. Think they're going to be it's the biggest aggregator platform for AVs. There's a lot of hedge fund managers that will take the other side of that, saying that the traditional rideshare model is going to be insanely and massively disrupted by autonomous vehicles and robotaxi. So Uber's a good one. I don't really have any skin in the game. I'd lean negative, but it's just been a painful short for so long, but haven't gotten killed on it. Just the short thesis just hasn't played out yet in a name like Uber.
Joel Kulina joining us here on Pre-Market Prep. Technology in media trading over there at Wedbush Securities. A great guest on the show for sure, and we got to get you on. Before the end of the year.
Yeah,
Joel,
that's good.
I think Q4. I think it's going to be a pretty exciting Q4 here. So thanks, Joel. Yeah. And Joel, I hope we get to meet your Are you a Blue Jay fan?
I'm a Mets fan. I'm a depressed Mets fan living in Toronto, but my kids are all in on the Blue Jays, so I'm joining the bandwagon. I could never change my hockey team, but the Mets are just a joke, so I'm happy to get on board with the Blue Jays, that's for sure.
I'm 90 minutes north of Toronto, and I'm not cheering for any Blue Jays ever. It's go Tigers here. We're Tigers forever.
All right, we'll see you in a few rounds, potentially. See you in a few rounds. All right.
Hopefully. All right, Joel. Go get him.
Guys.
Great
Take
information
care.
as always. Joel Kulina, Wedbush Securities, joining us here on Pre-Market Prep.
All right, bye, guys.
Thanks, Joel. Go back to Netflix here. We didn't.
Wait, Brettster has something for us.
Oh, what do you got?
Yes, I do. Let me put up the Hive overlay. I want to say thanks to our sponsor, Hive Digital Technologies. This show is brought to you by Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI, operating with nearly 0.5 gigawatt of renewable energy. Hive is expected to capture 3% of the world's Bitcoin production by the end of this year. In the bottom right corner, there is a little QR code. You can scan that to get some more info on Hive. You can also click the link in the description of this YouTube video. Thank you to our sponsor, Hive Digital.
And Bitcoin having itself a day here again. So I think just 1 second, cover the Bitcoin charts before we go to Netflix here, because IBIT, we talked about it earlier, up substantially here. I do think you have a little bit of flight out of US stocks, and they're like, crypto seems safer here with this government shutdown. So IBIT moving up here too. I want you to do me a technical here on the IBIT, or you can do the Bitcoin futures, whatever you want, Joel.
I just want to ask you before I do that. You're great at like calling like correlations and stuff, and for a while it was like the triple Q, well, NASDAQ, they went with the NASDAQ, and then I looked at a couple days where the market was way up and then Bitcoin was way down. I mean, is it just kind of Bitcoin here, or what relationships are you seeing out there with Bitcoin?
I think it's a good point you're making, that sometimes crypto is definitely correlated with risk assets, with the Qs, and that's the riskiest asset, like from the stock trading world, tech stocks. I think there's other times where it's disconnected, and I think this is one of those times. So the thing about trading and the thing about stock relationships, unless you're like, like direct, peers like a Coke, Pepsi and stuff, a lot are dynamic. So you're always evolving. And that's why, as me being a relationship trader, a stat arb trader, that I feel like I have an edge over the algos, because I'm always identifying that changing dynamic. I mean, think about, when we had COVID, all of a sudden you had a list of lockdown stocks, you had a list of, stocks that were reopening, and these companies had nothing to do with each other fundamentally, but they had everything to do with each other in the current situation we were in. Now, recently, we've done tariff stocks, and then we had the tariff proofs list, and then we had the tariff stocks that were going to get hit the hardest. I mean, just understanding that those relationships are constantly changing. Bitcoin in itself constantly changes too. At certain points in time, it's definitely correlated with risk assets. You get a stock market sell off, Bitcoin sells off too. But we're starting to see, I would say, over the course of the last few months, definitely separation there. And when you have stocks down because of a government shutdown, well, that's not Bitcoin's problem. So it's kind of predictable that, hey, if we want to buy something, let's go into crypto here, because this is kind of why crypto was invented, because the government's a mess, and they're going to keep printing press, and they're going to have to obviously inflate their way out of this. They got to find the money to, pay all the bills, to pay all the people here. Well, they're going to have to print more money to do that, is basically the whole premise behind Bitcoin. And there's only 21 million of these things, and we're not going to inflate over here. So, that's, I think, the whole idea. So I think Bitcoin was created for stuff like this. So it's pretty predictable that it would rally on a government shutdown.
It's also just, doing this with you for, so long, you'll get on the relationship will work, and it will work, and you'll keep doing it. And then it kind of doesn't work. And then you stop, and then you try and say, okay, is this going to get recorrelated? Or is this broken now? Do I have to find a new relationship to trade? And as Joel was talking, I mean, this market, you're having separation, even within stocks in the same sector. So a lot of things that
well, what he pointed out too, which I didn't consider, like he's like, OpenAI is fully attacking software stocks. And that's why he was saying, like, Adobe, CRM, that's when your computer blew up. So you didn't hear that part of the conversation, but it was fascinating. Because we continue to see the CRM, Salesforce.com, just showing, it's down near 2-year lows. The chart looks terrible. It looks like it wants to break down again here, which I think it is. An ugly head and shoulders going, with a big stretchy kind of neck head thing happening there. But you can see it on the bottom right chart, what I'm looking at. It looks like it wants to break down. And Joel says there's a reason this wants to break down, because OpenAI is fully attacking their businesses. So, that's, a consideration here too, that a tech stock is not a tech stock just anymore. There are opportunities here within tech itself where there's going to be separation. So understanding those mechanics, understanding which businesses benefited from OpenAI and which businesses are going to be harmed from OpenAI is very important, especially coming into the next year.
Okay, we're up against the clock here, 9 o'clock. We are.
They wanted to talk Netflix quickly, so it is down 25 points. So I just want to squeeze that one in.
Okay.
Elon Musk did tweet out yesterday. He advised everyone to cancel their Netflix subscription. So I don't know. I didn't see all the details on why he's all of a sudden
Why?
taking. Well, I didn't go that far to read into it or whatever, but I just saw the tweet go by here. So he's full on boycotting Netflix. He said he canceled his Netflix and he advised everybody else to cancel their Netflix. When you get the richest man in the world telling everybody to cancel, he's got a big voice. Some people actually might listen. So that's why the stock is trading down 2% here this morning.
This is just hanging on, just hanging to the 50. I mean, just hanging on by the skin of its teeth at the 50-day. That comes in, wow, way up at 1208.78. I don't want to put the 200-day in there because that's going to be a ways down. This has been holding on, and is now breaching. No, it hasn't breached the August low yet. I don't know. One tweet from him, I'm not going to make a call on this one. I don't know. Kind of immaterial. I just want to cover one stock. We're going over time here. We'll do our ratings in the STN room today, which has been on fire since about 6:30 this morning with great comments catching up on the markets overnight. So thank you to the chatters in the STN room. ALGN hanging out at the low of the move. I mean, it's just sitting here and it needs a catalyst. And I don't know what that catalyst is. If you're hanging on here, the low of the move has been 122 even. I can't tell you. I mean, you got a stock that's trading below its COVID low of 127.86. Not a good performer unless you can identify a catalyst. I don't know. Be careful on this one. So that's it for today on pre-market prep. It's tomorrow. I'm out. It's the second holiday, Yom Kippur. Sal Rosh Hashanah by Yom Kippur has been, okay this year. We've had a retreat, but basically in the same place. Some great guests coming on tomorrow. We'll let Brent and Dennis handle that, but I'll be back with the pre-market prep crew on Friday. So let's get this trading day started on the Stock Trader Network.